Good morning, everyone, and welcome to Next, powered by Shulman Rogers, our April monthly Q&A with Next founder and co-chair Anthony Millin. We are very excited to offer these founders Q&A sessions every month to help entrepreneurs respond to all the burning questions that they have at any given moment when you're launching, growing, and scaling a startup. We have some exciting announcements here on our end that I will let Anthony tell us all about. And with that, I will turn it over to Next founder and co-chair Anthony Millin. Feel free to put questions in the chat as well as just unmute and fire away. Anthony.
It's great to be here. Thanks, Lisa. And one of the things we wanted to just mention today, you may or may not have seen it yet, but we just announced this week the launch of a new platform called Next Raise. And Next Raise has been created to really accomplish a few things. Number one, to really help entrepreneurs as they're working to become investor ready. And we have programs like our Pitch Masters program and other programs to help achieve that. And then also we've launched Next Raise to help connect founders, investor-ready founders who are out looking for capital with investors who are actively investing in the marketplace. And we do that through showcases. We have our first showcase coming up June 1st. And then we also do that through a partnership that we have with Capital Raise, which is a platform that founders and investors participate in for warm introductions. So take a look at, on our website, you can take a look at Next Raise. And again, for this first showcase, it's if you're an investor ready company or client who is generating revenue, you have an opportunity for being put in front of investors who are going to be on the panel and who will, we have two panels, one Series C, one Series A, and they'll be going through the applications that come in and selecting meetings, companies they'd like to meet with when in the couple of hours that before the panel starts. So take a look at Next Raise, just another step in our commitment to meeting our mission, which is empowering startup success.
And you'll see that I just inundated you all in the chat with lots of links, links to Next Raise generally, links if you are a seed to Series A startup that's actively raising where you can apply. And if you are a seed to Series A investor that would like to attend, there's a link for you as well. So we hope to see you all there and keep up to date with Next. So let's get started with some questions. Who would like to kick us off? Feel free to unmute, put a question in the chat. Don't be shy. It's Friday.
Well, how about, this is Jim Zier, Anthony knows me. How about pre-seed, pre-revenue tech startups? Where do we fit in there?
In terms of capital, in terms of Next Raise, we have the Capital Raise platform that you can put into, and that there's several hundred investors who are in that platform. And that platform looks to highlight companies that could be a good match for investors, and then looks for people who could make a warm introduction. So the Capital Raise platform as part of Next Raise is something that you can go into. This particular showcase is geared to investor-ready revenue companies, but we plan to have many more showcases, and there'll be different themes and different groups tied to those showcases as we continue to roll out Next Raise. But it's definitely still worth putting into Next Raise and signing up in Capital Raise.
Okay, thank you.
Yeah, Anthony Prab here. I'm the founder of BuildWise, just for everyone to know. It's a knowledge sharing platform for construction industry. The question I have is, although I'm not looking to raise right now, I'm more interested in onboarding new customers. That's what I'm doing now on the platform. Feels good to be doing that. Feels good to be busy doing that. But since I'm on this call, it made me think at some point I will be raising. But is it possible for me to know if there are investors who are more focused or involved in the construction industry and rather would want to connect me with potential customers that they have and see that the relation gets nurtured before we get to raising?
Yeah, so a good strat, and that's a great strategy in terms of building relationships with investors. So one of the things that we do with clients of ours is we can work with you through PitchBook to identify investors who are active in the construction space. And once you've kind of identified, one of the things you can do is introduce yourself, because a lot of times investors want to get to know companies and track their progress, and companies that are not actively raising at the moment, it's actually a great time to start building relationships with the investment community. It's sometimes even better to start building that relationship pre-raise, where you can be sending monthly or quarterly updates to the investor showing your progress. And during that, if you can also start to ask some of those investors for introductions to customers they may have, or people who could be partners, and they're going to be happy to help grow the relationship as well by doing that. So that, I think, is a really strong strategy, and very valuable for both the investor and for you.
And the best way to identify who would want to be on that mailing list for the updates would be to ask around, or do you what's the best way to find who is interested?
Like I said, probably to schedule some time with us to do a pitch session where we can hone in on a list of actual investors who have highlighted that they like to invest in that space. And from that list, you'll be able to kind of reach out. It's nice to reach out and say, I've been tracking, I see your portfolio. You have a lot of companies that are in my space. I'm not looking right now. We did an initial raise and we're now bringing on customers, but I'm looking. I know I'll need to raise again in 6 months or 12 months, and I'm looking to start to build a relationship and get to know some of the investors active in the space for when we're ready.
Great question, Prab. Thank you. A question in the chat from Sigurd. What is the sentiment, given the market conditions and everything going on, for fundraising using a convertible note, safe price seed? Are we seeing anything that is favoring one over the other, given current market circumstances?
Yeah, so that's a great question. We're still seeing activity, and a fair amount of activity in the market within our next practice. We've had a number of clients that have had closings in the last few weeks. I think the keys are just, number one, investors still have capital, and they're sitting on a lot of capital. I think that investors are being more careful and taking more time with due diligence and taking more time to get to know companies. I think investors have moved a little bit to the right in terms of, if they were investing with just a small amount of traction, they're looking to see more traction. If they were investing with the beginning of revenue, maybe they're waiting to see more revenue. If it's just at the idea phase or the minimum viable product phase, they're looking for some at least initial indications from customers who are interested in trying the products. I think people are still investing. There's still money. Companies that are strong companies are still actively raising capital. I think valuations have changed. So when you look, there's no question, if you look at data in Carta where they list data on activities, you see like things are down 25%. So there's definitely not the same volume that there was before. And I do think that people are raising smaller rounds than they may have. So if a year ago, 2 years ago, you were going to do a bigger round of a few million, maybe you're going to need to raise a smaller round and get some more traction before you go out for the bigger round. And I also think the valuations that people were asking for and getting a couple of years ago have changed.
But convertible notes and safe versus priced
In
seed
both,
round.
we still doing a number of safes.
Okay.
We're still seeing convertible notes and safes happening. We're people who are comfortable with convertible notes are still doing safes are still doing safes. We've still done more safes than we've done convertible notes in the last few weeks.
Because what we sensed here during Christmas time, and even when Silicon Valley Bank went bust, we sensed that priced seed round would just, the dilution and pricing is so stiff at the moment that you would go for a safe or convertible note these days and wait for the market to come back in 12 to 18 months.
Yeah, we're seeing more safes and convertible notes. We're not seeing a tick up in price rounds. I think it's harder to get a price round done. And I think that, the valuation caps that are coming in are lower than they were before. So, and that's where I was saying also, if people needed to do a bigger price round, they're bridging it with a smaller safe to just get some more traction and some more proof points under their belts.
So Anthony, this is Jim. What would you recommend with the lead investor? Equity, safe, or convertible note?
From the founder's perspective, safes are the safes are a good instrument in that they don't have some of the maturity date issues and interest in a convertible note. So you still have the same situation with convertible notes of what happens when you get to maturity if you don't have the capital to repay it. So I think that from a founder's perspective, starting out and asking for a safe, it's also from a complexity point of view, the least complex of the documents to put together for that reason. I think we are seeing some investors that are going back to convertible notes or who are putting language into their safe. So instead of just using the standard Y Combinator post-money safe, we're seeing some people starting to ask for some additional clauses to be added into those safes to customize them a little bit more. But after they become customized too much, then you might as well be back to doing a convertible note. Again, priced rounds for the smaller seed raises sometimes just add a lot more cost and complexity, plus the actual pricing of the stock is a challenge. And so to do a price round, if you're only raising $1 million or 500 or 1.5 million, sometimes is a lot for that size, and you're better off staying with the convertibles or the safes.
Thank you.
Great discussion, everybody. And those topics are always front of mind. We have Peter who has a hand raised, and then in the chat, Jan has a question about new chip accelerator bankruptcy filing, which I have to say I was not aware of. Is anybody aware of?
Well, the parent company is in bankruptcy.
Okay.
Not New Chip. I'm a member of New Chip. I was in a meeting yesterday with them, and that topic came up.
They filed for Chapter 11, March 16. I was aware of this early April.
Okay. Because we still have clients and people, participating in New Chip. So I guess, James, you would know better, Jim, if anybody should be concerned about the accelerator itself.
Well, a New Chip said not to be concerned. I don't know how much you could value their opinion, but that's what they said. Beyond that, they didn't offer any warnings or concerns.
Interesting. Okay. All right. Peter, you have a question.
Yeah, I have two questions, kind of more fundamental questions, because we're undergoing sort of a review of incorporation, and we're in a little bit of a different space than maybe some of you in the ed tech space. So we do education related work here in the US, but also globally. And one of the questions, and we as a company already have revenue coming in. So we're not pre-revenue. We have certain programs that generate revenue. And our expectation is to seek funding at some point, but to maintain that steady flow of revenue, because it's always good to have money coming into the company to be able to build things, more steadily. And so I was wondering if you comment a little bit and kind of update us a little bit on sort of the debates over like a C Corp arrangement versus an LLC in this case, in this sort of situation where you do have this revenue, but you are trying to make sort of investments in key critical areas of the company with an anticipation of investors in, say, a 12-month horizon, something of that nature. And the second question along with that, maybe you could talk a little bit about is the equity table, and sort of if we do go more of a C Corp route even in the short run or the long run, what are some things to keep in mind? What do you sort of see as sort of general principles, and how do you sort of guide people at Next in that way? Because we've received a lot of different advice from a lot of different people about how much you should leave open for employees, how much you should give to advisors. Like a lot of like commentary out there is different rules of thumb. So I'm wondering some of your thoughts or guidelines or how you guide people on some of those questions. I know that's a lot.
No, it's a great set of questions. So first of all, the C Corp versus LLC, the big drivers when we're speaking to companies about whether to stay as an LLC or to convert to a C Corp are around the following. One is the timing of raising capital from investors, because investors, as you stated, will almost always want to see a C Corp. And the reason is that they don't want the pass-through of profits and losses from the portfolio company, because their structures, their fund structures are they want the blocking capability of a C Corp from that pass-through structure. So that is if you're looking at 12 months, unless there's a strong tax reason, like you trying to pass through losses to the founders, or you don't want, at some point during the year, you don't want to do a stub year with part LLC, part C Corp. If you're raising, you'll often want to just convert to the C Corp. Another area is around the equity incentive plan. So if you have employees, you can give employees incentive stock options through an equity incentive plan in a C Corp that have some more familiarity to people than unit appreciation rights, which would be what you would use in an LLC. And the incentive stock options have certain tax benefits in terms of not being taxed, not only when they granted and when they vest and when they exercise, but only when they're sold. You can't issue those types of incentive stock options in an LLC. So sometimes when you're looking to grow and you want to give actual stock options to employees or advisors, you convert and put an equity incentive plan into place. Another reason for C Corps is if you are a qualified small business stock, the qualified small business stock exemption under section 1202 of the IRS code, Internal Revenue Code, there is, if the shares are held for at least 5 years before sale, there's significant tax benefits upon a portion of the capital gains that gets exempt from tax upon sale, and there are different formulas for calculating that. And so people sometimes want to start that 5-year clock sooner. You're not qualified for that as an LLC. So those are on that side. On the flip side, the LLC, sometimes if people are losing money and they want to be able to pass through the losses to the founders to offset against certain types of income on the founder's tax return, you stay as an LLC. You do have the no double taxation in an LLC, which you do have in the C Corp. But the tax rate being much lower than it was several years ago reduces that benefit. You know, it's not as impactful. And the other thing you have to think about, if you're generating revenue as an LLC and you want to use the money to reinvest for growth, you get taxed on profits in your LLC, regardless of if you distribute that money out to the founders. So let's just say you make $250,000 or $500,000 in profits, and you want to invest all of that money to grow the business. The founders will still tax on that amount, whether you distribute that money back to the founders or not.
And so in a C Corp, how would that 500,000 profit?
That money stays, the company, if they have profits, the company will pay taxes. And then you're not distributing it out. You would then reinvest the balance, or depending on what you're spending, you would look at the profits and the expenses in the business.
Mhm.
But one of the things you want to look at as an LLC is, based on your plan, you want to sit with with an accountant and go through what the tax implications would be based on the reinvestment if you stayed as an LLC, and what it would look like as a C Corp. So, sometimes if you are going to just be reinvesting everything for growth, you want to look and see if there's a tax benefit to being a C Corp around that.
Great questions, Peter. We get those a lot, so it's always good to go over those pros and cons.
The second question that you asked, having to do with stock like size of the company. So when you form this, just say you're a C Corp, you authorize your share, that you have 10 million shares authorized, right? You become a Delaware C Corp, you have 10 million shares authorized. You're going to issue in that conversion from the LLC to the C Corp, a certain portion of the shares, let's just say 8 million shares, go to the founders. Let's just say you have 2 founders. And then what's basically going to happen is you're going to set up an equity incentive plan. Often that plan is like between 10 and 12% of the amount of the shares in the company. So if it was going to be 10%, you would put 888,888 shares into the equity incentive plan, so that it's 10% of the fully diluted amount of the company. And then when you do convertible notes or safes, you're not changing them. There's no cap, there's no shares being issued yet. When you eventually do a priced round, you will amend and restate the certificate of incorporation. If you do a preferred stock round and you're going to authorize preferred stock, and you may be increasing the amount of common stock that's authorized, and your new investors will often ask for that same 10 to 12% of the company to be in unallocated. So let's just say, between now and when you raise money, half the options that you've created have gone out to employees and advisors. When you do a priced round, the investors are going to ask you to top up that pool back to that like 10%, just say, so that you've got a full 10% of options that are unallocated and available, because they don't want to be diluted by. They want to make sure that between then and your following round that you raise, there's going to be no new options added to the pool. So you typically going to be typically you see 10 to 12% in a pool, but every time you grow the company and do another round, you may top that pool up right before that round of financing.
Thank you. Thanks, Peter. One more question in the chat, Anthony, about defending patents for enterprise SaaS companies in particular. what are your thoughts? What are we seeing in terms of when is it worth it? When is it not? Obviously, a lot of time and money. Sometimes you may have to, other times not. What's your view on defending patents generally?
Yeah, we don't do, one of the things we don't do within Next, the Shulman team is the actual patent work. So we have a number of very experienced patent-only law firms that we work with around those in terms of, so we're not directly involved in seeing kind of how those are progressing. In terms of the value, the value of the cost of defending the patents versus the underlying value of the patents to the business. So unfortunately, I don't have a lot to add to that particular question, but we're happy to put you in touch with, and we can share a couple of firms that we work very closely with. This is all they do is assess the value of a particular portfolio of patents versus the cost and time in defending that portfolio, who I'm sure would be happy to just jump on a call and give you their sense of that. And Lisa can share the contact information.
Yes, absolutely. If you go on our website under community and partners, you'll see our patent partners. You can search by patent. You can reach out to them directly, or feel free to email me, and happy to make that intro. We have about 2 minutes left, or if anybody has a final question for Anthony or an issue to bring up.
Yeah, I have a quick question. So at the recommendation of a previous attorney, I changed from an LLC to a Virginia C Corp. And now I'm meeting with investors. I got a meeting with a VC in a week or so here in Virginia, and a face-to-face meeting. And he's probably going to want to either do a SAFE or something like that. Question is he going to want me to change to a Delaware C Corp? Is that mandatory pretty much from an investor point of view?
I mean, once you get into priced rounds, a lot of investors will want you to be a Delaware C Corp. A lot of the documents that are standard industry documents for doing a priced round are for Delaware, and companies are very familiar with Delaware law. If you have somebody who's just ready to move forward with a SAFE, one of the things you may do is put into your document that prior to the conversion of the SAFE into equity, that you'll move from a Virginia C Corp to a Delaware C Corp. So you can build language into the SAFE that says we're not going to go through the time and effort to do that before the closing of the SAFE, but before you ever get shares in our company, we commit that we'll move from Virginia to Delaware. Now, the point is, if you were a Virginia LLC, you can't go directly from being a Virginia LLC to a Delaware C Corp, I believe. I think you have to go from either a Virginia LLC to a Delaware LLC, and then a Delaware LLC to a Delaware C Corp, or you have to go from a Virginia LLC to a Virginia C Corp, and then a Virginia C Corp to a Delaware C Corp. So the fact that you have some states, you can go directly from like a Maryland LLC to a Delaware C Corp. So the fact that you've gone from a Virginia LLC to a Virginia C Corp, you're on the pathway you needed to be on anyway. There's not a wasted step in there.
Glad to hear it. Thank you.
And with that, we're right at 11:30. So thank you all for joining us today. Hope you have a wonderful weekend. You can download the chat before you log off, so you can access all of the information, but basically it's all housed on next.law. If you want to look, we hope you will apply for Next Raise. Thank you to Anthony for joining us today. These sessions are always super interesting, and stay connected. We hope you have a great weekend. Thank you all very much.
Thanks a lot. Bye-bye.